All right, got the recorder going, and we're going to get an early jump today. Markets don't open for another half an hour. Let's not waste any time. So those of you that are logged in early, you get the bonus today. Okay, Palo Alto. We have a 252.5 strike call calendar, a bullish call calendar spread. Stock closed yesterday around 235. This is $17 higher. And as a quick reminder, if we go to our whiteboard from yesterday, which you can see right here, the expected move was about 15 and change. Okay? So the expected move, the expected range was only about to 248 to 250. We decided on the 252.5 calendar because of the reward to risk. It presented some great reward to risk. Okay, now let me put up first the risk chart of how I think we're going to be looking today. And let me make sure I have the adjusted volatilities in there. Yep, I do. Okay. So we bought this thing. Some people bought it for 75. Some people bought it for 80. Okay. Now, first thing is the valuation on this graph here is assuming that the spread went out yesterday at 95 cents, which you can see here. Actually 96, but we're going to say 95. We bought it, and I'm going to call it 80 cents. So to this graph right here, everybody, we're already 15 cents in the black, 15 cents in the green. So any sort of P&L that we're looking at down here, add 15 cents to that, to the theoretical value. Okay? Everybody understand that first before we move forward? Okay, so we used the 252.5 strike. Obviously, in any situation, the ideal spot for a stock to go is to the short strike. So as you can see here, where is the highest P&L on this graph? Right at 252.5. Okay, we start to see profitability kick in on the upside here, probably around 242 or so. And the profitability increases. And what do you notice about the delta of this spread as the profitability is increasing? What do you notice there? Well, look at the delta as our profitability is increasing, okay? As the stock is moving up. I should have actually phrased that differently. Look at the delta of the spread as the stock is moving up. Okay? The delta actually is long delta, but then it, like Jay just said, it starts to taper off and it starts to get negative. Once especially we reach the strike, okay, it gets negative. Why is that? And then the correlation between delta and profitability goes hand in hand, right? As we see delta start to reduce and actually go negative, we actually start to see the P&L drop as well. So how do the two of those work together? How do the two of those work hand in hand? And why? Why is that happening? More importantly, why is that happening? This is the goal, to get you to understand why that's happening. Okay, Avi, I would agree with that, but what? What is causing the short leg to be the determining factor there of our profitability from a delta standpoint? Okay, it does coincide with theta, but let's stick to delta right now. Nope, Bill doesn't have anything to do with that, but keep the answers coming. Okay, Avi, you got a really good handle on this. Really good handle on this. And this is going to be easier to look at and understand when I change the screen here and break it down by expiration. So now I've got the position broken down here by the March 1st expiration and the March 8th expiration. Okay? So you can see the delta. Don't look at the dollar delta. Don't look at this top line where it says minus 628 plus 2114. Just look at the individual option delta here. You can see right here, now this is right here right now where the stock closed yesterday at 236, okay? Minus 3 on our short, plus 9 on our long for a net long 6 delta. But now look what happened. I just changed the price here in the center of the axis up to 255, just above our strike. Okay, just above our strike. Well, you can see the delta just started shifting negative. The overall delta of the spread. Do you see that? And if I go higher here, what's going to happen is the delta of our short option, because we're so close to expiration, only 2 days away, is really going to change much quicker than the delta of our long option. And that is due to another Greek, which I don't want to really get into right now, but that is due to another Greek measurement called gamma. Okay, so the delta of our short option is going to start moving towards 100 pretty quickly. So watch what happens here. If I move the stock up to 260, look how that really started increasing. Yes, our long increased also, but not as quickly as our short. Okay, and you can see as I move the stock higher and higher and higher, the overall net delta to our position actually gets shorter and shorter and shorter. Okay, if I move this right back to our strike, look at the delta there. Zippo, 0. Overall delta is 0. So below the strike, we're going to be long delta, which is a good thing. We want that in this position. Above the strike, we start to get short delta. So coming full circle on this, when we always talk about why we want a stock to move to our short strike, yes, it is because we want to collect all the premium that we can in our short strike. But this actually shows now how it relates to the other Greeks. Okay, so, you know, if I were to, let me go back to our P&L chart here. Hang on one sec. Okay, here's our P&L chart. This is today. Let me take that out of there. Okay, this is today. What do you think is going to happen if I move the day ahead to tomorrow, which is 1 day closer to expiration? What's going to happen to both delta and to P&L? What's going to happen, guys? What's going to be closer to 100%, Avi? Well, if I move the day forward, the short option, exactly, Avi, gamma will increase. So the short option, depending where the stock is trading, is going to start gravitating even more so, either towards 0 or 100, depending where the stock is. It's really going to kick in. In addition to that, and whoever mentioned theta before, let me go back and Shane, you did. Shane, you mentioned theta. We're going to start collecting. we're going to be receiving more of that theta in that short option because we're closer to expiration. So just watch here, guys. All I'm going to do here is change the date from today to tomorrow and take a look how the P&L and the delta shifts here. Okay, there we go. The delta increased a little bit here and then started decreasing more as we got through the strike. But look at that P&L. Look at that P&L difference. So let me go back to the 27th. Just focus on the bottom line here, guys, the P&L. Let me go back to the 27th. Okay, there we are today. And if I go to the 28th now, watch how much we pick up just overnight because of the short premium. Okay, here we go. So if we had a crystal ball and we could say, all right, Palo Alto right now is trading 258 through the strike. Not horrendous. We want it, to be as close to 252.5 as possible. If we had a crystal ball and said, all right, we can wait another day and the stock's going to be in the same place. So 258, that would be phenomenal for our position. We would pick up another day's theta, another day's decay, another 50 cents. But we don't have that crystal ball. What if the stock moves to 280? Or what if it moves back down to 220? Right? Remember, this is a trade. It's not an investment. So there's a lot of moving pieces. There's a lot of moving parts that go into factoring what this thing is going to be worth right now. The biggest one right now, for right here today, February 27th, 8:30, when we open up in 15 minutes, the biggest one is going to be the stock price. As the day progresses, as we move to tomorrow, just as importantly will be the theta factor, the fact that we're getting closer and closer to expiration. My guess is, my best guesstimate, okay, if we open up right here at 258-ish, and now listen, stock traded all the way up to like 267 or something last night, that would not have been good for us. 258 is going to be pretty decent. It's not going to be, total gangbusters. It's going to be pretty decent. My guess is this thing will open up probably around $1.25 or so, be a 50% winner. Okay? The better it is for us would be if the stock starts gravitating back towards 252.5. Okay, I know I'm going to talk about this repeatedly today. But as long as you guys were here early today and it's, a pressing matter for one of our positions, I just wanted to start the day early. So if you guys want to load up your exits for Palo Alto, okay, I'm not saying this is the price, guys, but what I am saying is my best guesstimate. Again, this is with the stock trading in this range. We don't know 15 minutes from now where the heck this thing is going to be trading. But if the stock is trading in this area, my guess is our spread will be trading about $1.25. So, if you just want to have your exit order ready to go, but not sending anything, probably $1.25 is the area that we're looking at. And Jay, right? Remember last night I was talking about how, we kind of come full circle and things really just start working together and the dots start connecting. This is one of those scenarios. This is a perfect opportunity to connect those dots. All right, I'm going to shut up now. I'm going to turn the recorder off. This was recording. I will get this posted up in the room. Again, I'm sure we will have plenty of discussions on this, and I'll be back. Thanks for listening early, everybody. Hey, I